Aryeh, we just saw a $52 billion plus deal getting done. Are there more deals of that size or similar to come in 2018?
Well, obviously, it's hard to preview on air exactly which deals are going to happen in 2018, but you are seeing a trend line here, which is the need for more scale. And it's not just among the media companies, it's also among the technology companies and the distribution companies. It's all in an effort to get to that consumer in the right way and to how to engage that consumer. Amazon has been doing it, Netflix has been doing it very effectively. The content companies want at it directly, not just through the existing distribution models, but they also want that as well. And the distribution companies are obviously engaging with the consumer in their own ways, cable companies, telecom companies, and you'll start seeing more efforts among those parties to get to the consumer as well. That will take scale, that will take deal flow, and the overall market environment with interest rates being low and obviously cash being aplenty facilitates that.
So do these deals get done? Do they get past the regulators? And I'm thinking the AT&T deal as well.
Well, the state or the regulators do have a lot to say about how this industry is going to be shifting, which is logical at a time when everything is moving around so rapidly that it's important that the government has a say, at least according to them, about where things will be situated long term. So I don't know exactly which deals are going to get approved, which is not approved, or whether there will be remedies. But there will be a need for collaborative behavior between the companies and the government to actually figure out and talk about which deals can be approved. I think a lot of these deals will end up getting approved, frankly, but maybe not in their current form.
Yeah, I mean, everybody took a step back and it seemed like the world was rocked when suddenly a vertical merger was stopped at the gate. Why was that such a surprise, and how do companies satisfy regulators in order for a vertical merger to happen?
Well, vertical deals, we should explain, refer to a platform company, whether it's a technology platform or a distribution platform like a telco, like AT&T, owning a business that's not in their current business. So let's say like a content company, for example, they don't compete with each other, they're complementary businesses. So that usually has precedence for getting approved because it doesn't change the competitive dynamic, it just creates a diversification model. However, I think in this case, the government is fighting that deal based on saying, what is the actual narrative that will benefit the consumer? Is it consumer friendly or not? And I think that will have to get flushed through, but the precedents do dictate that that deal should get through. The question is, what is the government's issue with that deal, and how can AT&T potentially resolve that through litigation or changing the deal?
Because if you don't see more vertical mergers happening, and I know you see a lot of national horizontal mergers happening next year, then what is the landscape going to look like? Is it just going to be a bunch of content companies getting together?
Well, the question is, what are we trying to solve for? When we advise on deals, we're talking to executives about what their goals are, what their financial goals are, and what the strategic goals are, and how do you solve for those deals and solve for those questions and problems to solve. And so I think what we're trying to solve for is effectively a better consumer experience, A. B, which is more content, more convenience, et cetera. 2 is more connectivity. In this country, we still don't have a national broadband platform. We do in a lot of countries like in Europe, in Latin America, and potentially in Asia. But in the US, you don't yet have a national platform. So you still need horizontal deals to get to more connectivity with broadband for all Americans. You could solve that through regulation, you could solve that through free enterprise and build outs, or you can solve that through deal flow. I think that's also very important, not just the consumer offerings.
Well, so it does certainly seem like more people need more content, but they also want more eyeballs. And the tech companies have that figured out, right? The Netflixes and the Amazons, and now Amazon is getting into the studio business, and it can afford to pay whatever it wants on studios, right, and on movies and so forth. So what does the likes of a CBS do, a Viacom?
Well, I don't want to talk about the individual motivations of those companies if we're obviously involved in those conversations. But I do think everyone would talk about the need for more scale, including Shari Redstone, who obviously controls both those companies you mentioned. She's talked openly about the need for more scale. But then the question is, to what end? Is scale in content enough? And I think what Disney has been acting on is the fact that scale is necessary, even for the content companies, to compete with Netflix and Amazon, and then over time have their own direct offerings to the consumer, not just relying on platforms to do it for them. But a lot of content companies are in the middle of the ocean right now. Mm-hmm. They don't have enough scale to compete for the consumer offering, and they don't necessarily want to be sold yet. And so they have to resolve that, which I think will lead to a lot of activity in 2018, one way or the other, buying or selling.
So what's better for the likes of a Viacom or a CBS? Is it to be bought out and to, or to make more acquisitions themselves and do it themselves?
I think to be part of a broader platform is very important, whether it's the two of them together and having more scale, like approaching a Disney Fox or approaching a Time Warner, or to have more of a platform orientation where they have a big brother, so to speak, or a big sister, so to speak, to help get to the consumer directly. But I think everything is going to evolve here, and you'll see different shots on goal in terms of how to get to the right deal flow. It won't be the same boilerplate deals for every single company or scenario.
Charter, you obviously represented Charter back in the day on its restructuring, brought in John Malone and so forth. You know the company backwards. Now, Malone has said that a couple of people have approached him, but he hasn't been interested enough in their offers to bring it to the board. What happens to Charter next?
Well, I think you could assume that any offers or any overtures that come into the company, are assessed properly by the board and not just by John, who obviously has a strong influence. But the company is, I think, very focused, led by Tom Rutledge, on their plan because they just bought Time Warner Cable about a year and a half ago, and they're integrating those offerings right now to create more broadband connectivity, more growth overall in customers, which I think is their primary focus right now. There's such a great path for the company organically that it puts a very high bar on M&A. But again, I think what's interesting is more broadband connectivity, not just getting to content, not just being vertically integrated.
And I know you're less worried about net neutrality going away than you are excited about broadband and the investment that might come, particularly with the new tax overhaul. But we'll talk about the tax and what that might bring in a moment. I want to ask you about OTT offerings. It seems like everybody has to have one now. Fox was almost criticized recently for, waiting too long. Disney and Fox for waiting too long to do this deal to allow Disney scale. Do we get to a saturation point with OTT?
It's a great question. First, OTT refers to over the top or DTC, direct to consumer. Right? These are acronyms we all like to use in the media industry over time. But you're right, we are going to 2018 expecting a lot of the consumer. I always joke that I've never heard a consumer walk down the street holding a placard saying, "I'd like a skinny bundle, please." It's a function of how the companies are evolving more than what the customers are asking for. I think the customer definitely wants content and wants distribution and wants convenience and wants a different way of consuming media than they ever have before. But we're asking a lot of the consumer to be able to take all these offerings all at the same time.
Well, and we're going to end up with effectively skinny bundles of over-the-top offerings, right? So does it make sense for all of these players to create their own platforms? Should they be spending that money on different kinds of R&D? Or are there small companies out there that will one day solve this problem?
We're in a transition moment, so there's not going to be a logical outcome that's going to be clear to everyone, I think, in 2018. There's going to be a moment where we're trying different things for the consumer. Beyond just the video offerings that the direct-to-consumer platforms have, what about the devices? How about the devices? How about when you're in the home and you actually think about your actual experience, you're talking to Alexa, you're using Roku, you're using a smart TV. Which device, maybe voice activated, will you have in the home that you actually consume all this content? It won't just be sitting in front of your TV and saying, I'll subscribe to Netflix or the ESPN offering or Hulu. It'll be what device activates that.
I want to read something from your December letter, your year-end letter. You say, and we have a little quote of it, scale, for the sake of scale and synergies for their pure financial value are not enough to change long-term perspectives of the challenges facing the industry. And this is the key point. Shareholders want to bet on evolving ecosystems and platforms. You have a number of private equity and venture capital firms, SoftBank's, Venture Vision Fund, there's the Apollo LBO Fund, the new one. They want to bet on the new big thing. So where are the returns for them? Where are the large investments that they can bet on?
Thank you for showing that quote and highlighting it, because there are two ways to approach a deal or a transaction. There's the financial lens and the strategic lens. And I think a lot of focus is on the financial side of the equation, which also has to work, obviously. But unlocking the strategic upside and where these companies will end up, what the terminal value is important. And private equity can play a big role with so much capital out there, deep pockets, not just SoftBank, but private equity funds like TPG and Apollo and Blackstone, KKR, and actually playing into the ecosystem and unlocking value and bridging the gap between today and tomorrow.